Joining us now is Stephen Koukoulas to look at the day in business and the market. Stephen, the big discussion right now about infrastructure, has the government got the balance right? Alan Tudge has written an op-ed in the AFR saying they're willing to go faster if the states pick up their game. Josh Frydenberg's at the ACCI lunch in Brisbane today making his case as well, saying they get it. They're clearly wanting to at least send that message right now.
They are. Look, the infrastructure spend is one area that can be ramped up a little bit to the extent that the economy needs a bit more of a boost. That, we know that when the June quarter GDP numbers come out shortly, GDP growth will be about 1.5%, so pretty weak. So we've got the Reserve Bank cutting rates, of course, but now we've got this infrastructure discussion, and it's an important one. The question about infrastructure is what can be done now. A lot of infrastructure projects, roads, second airports in Sydney, take a long time to be built. So the impact isn't now when we need that boost. So to the extent that the Commonwealth can work with the states, because the states are one of the biggest spenders on infrastructure, to fast-track some of these projects, the better.
It is interesting to see, in particular, with a lot of the reporting in the last week is focused on the construction industry and saying that there is really lacking. Is that not going to have a flow-on effect? If the construction industry is slowing down, that's going to affect a lot of other industries.
Oh, look, I think that's a key point because the construction sector is under pressure from the housing decline. If we think of the construction sector in, say, three broad measures: housing construction, non-residential construction, which is things like hotels, factories and shopping centres, and then infrastructure spending. We know dwelling investment's going to be really weak. The non-residential building is also quite weak, so it comes back to infrastructure. So if you're going to get people putting up bricks and mortar and concrete and windows and building stuff, then you need the infrastructure side to pick up the slack. So your point's a very, very good one. And we do know that some of the listed construction companies on the stock market have been doing very poorly recently.
We've got some analysis out today, the Australian reporting from Treasury about stubborn workers, as it's been called, not leaving unproductive companies. Have you got a view on that? Because it seems to me that if you get into a cycle, I guess, where people don't have a lot of confidence, if they're just keeping their head above water in terms of a lack of wage increase, you're not really going to be in a position where you think, oh, let's move somewhere else.
Job insecurity is the big issue there, I think. That maybe it's my experience or time's gone by. People would jump employers to get a promotion, to get a pay rise, and that in fact fueled the strong wage increase that we used to see in a sense. But now we've got this job insecurity, I think. So there's a sort of about a 50 cents each way on that one, because when you've got insecure work or you're just not sure about where you're going to be working, you could be sacked and these sorts of things, you're going to be reluctant to jump ship quite as quickly.
And I guess recently the asset values in terms of property and so on, the downturn wouldn't have helped sentiment too much recently.
Not at all. And the fact that you've got that sort of economic funk, I suppose we could call it, with just, things aren't bad, but they're not great either. The workers are feeling constrained about changing jobs. They're feeling constrained about putting their hand up and asking for a pay increase, because if they do that, then they fear that they might lose their job. So, look, there's an element of truth in all of this, but I keep coming back to the same point when it comes to wages. Grow the economy faster, be it with infrastructure, lower interest rates, or some ramp up in spending elsewhere in the economy. Tax cuts are an important part of that too. Get that unemployment rate down to 4 point something, not 5.2 where it is. Get the unemployment rate down. Then businesses will be happy to pay a higher wage because the economy is strong. Workers will be able to demand a higher wage because the unemployment rate's low.
Is this not the kind of scenario, though, where they could encourage workers to become better skilled? We see in Scandinavian countries, they call it flex security, because you can switch companies really easily because you're quite skilled.
Look, that's a long-run issue. It's a really important one, but skills, education, training are such a vital aspect of our dynamic economy. We know technology is expanding at a rapid rate, and it will for many, many years to come. So the workforce, be it a young person finishing school, going to university, getting TAFE training, or a middle-aged worker whose job is now obsolete. The classic example in recent years is the car industry. Having a skill set that allows them to move industries, perhaps when their industry closes down, or to just take advantage of the new technology that's coming on is really important. So skills, education, training, that's something that I think is really important. It won't fix wages tomorrow, but it's there for a more medium-term take.
Give us a sense of where the markets are at right now. There seems a disconnect. Annalise and I discussed it yesterday with a couple of our contributors in relation to the United States hitting record levels on Wall Street, yet Australian market's a bit subdued. Why is that?
Look, our market's strong, but not as strong as the US. One thing that is evident in our market is that our companies, or the ones that are listed on the ASX, tend to pay really high dividends, whereas in the US, they pay low dividends. And I don't want to get too technical, but what that means is that the US firms tend to retain their earnings and put it into the stock price, whereas our companies, as we had this discussion on franking credits before the election, they tend to pay very high dividends and dilute the value of their shares. Now, that's one way of me sort of defending the ASX, and to say that if you included the share price plus dividends and looked at that over a several-year period, you'd actually see that the Aussie market, investors in the Aussie market, have done quite well, even though our index is lagging behind the US indices.